Welcome to the DSMR. This briefing highlights where smart money is flowing as of this video date. As a quick primer, when smart money is distributing, retail investors are buying and institutional investors are exiting. And when smart money is accumulating, retail investors are selling and institutional investors are building positions. This data, including charts, graphs, and the ability to create bottoming signals, are available to you on bottomfinders.com. Head over there after the video to create a free profile. And with that, let's start the daily briefing. In the communication services sector, institutional smart money is showcasing mixed dynamics in both entertainment and wireless telecommunication services. Smart money has entered a markdown phase, driving prices lower towards a discount zone to generate supply and wash out retail participants. Conversely, interactive media and services has advanced into a markup phase where institutional investors are driving upward price action to generate demand and attract retail buyers. The consumer discretionary sector is seeing heavy institutional pressure pushing asset values lower, mixed with strong buying at the lows. Distributors have officially entered an accumulation phase with smart money aggressively buying up shares from the supply pool and absorbing exiting retail positions. Meanwhile, hotels, restaurants, and leisure, household durables, and textile apparel and luxury goods have entered a markdown phase with institutional capital pushing prices downward into a deep discount zone. Defensive plays are witnessing broad institutional pressure in the consumer staples sector. Beverages, food products, and personal care products have all entered a markdown phase. Smart money is actively pushing prices downward into a discount zone, driving away retail investors through declining price action. The energy sector is showing consistent bullish institutional momentum. Both energy equipment and services, along with oil, gas, and consumable fuels, have entered a markup phase. Smart money is pushing prices upward towards a profitable zone, capitalizing on rising price action to generate strong retail demand. The financial sector reveals a multi-tiered tactical approach by major institutions. Financial services and mortgage real estate investment trusts have successfully entered an accumulation phase where smart money is quietly buying directly from the supply pool as retail investors capitulate. At the same time, traditional banks and consumer finance have entered a markdown phase with institutional forces guiding prices lower to establish a discount zone. Institutional activity within healthcare remains highly concentrated. Healthcare providers and services have entered a markup phase, with institutional investors steadily elevating prices towards a profitable zone to build upward momentum and draw retail interest. The industrial sector exhibits a stark division between manufacturing and transportation plays. Aerospace and defense, alongside air freight and logistics, have both entered the markup phase, with smart money propelling prices higher to generate retail demand. In contrast, building products, ground transportation, and passenger airlines have entered a markdown phase, experiencing institutional pressure that is steering prices downwards towards a discount zone. And technology is experiencing widespread upward institutional manipulation. Communication equipment, electronic equipment, instruments and components, IT services, semiconductors, software, technology hardware, and storage and peripherals have all universally entered a markup phase. Smart money is aggressively pushing these prices upward into profitable zone, leveraging positive price action to attract retail buying. The materials sector is being heavily supported at discounted valuations. Paper and forest products has formally entered an accumulation phase, with institutional investors actively buying up shares from retail sellers to build a major position. Meanwhile, containers and packaging has entered a markdown phase as smart money pushes prices lower to establish a discount zone. Real estate presents a landscape between commercial spaces and development. Hotels and resorts REITs, alongside industrial REITs, have entered a markup phase, with institutional investors driving prices upwards, a profitable zone. On the flip side, real estate management and development has entered a markdown phase as smart money deliberately drives prices lower into a discount zone. The utilities sector is heavily anchored by long-term institutional buying. Water utilities has entered a definitive accumulation zone, with smart money actively absorbing supply and buying positions directly from exiting retail investors. Simultaneously, electric utilities and multi-utilities have entered a markdown phase, with institutional capital steering prices downward towards a discount zone. In closing, the goal in investing should be to move with smart money and not against it. And our goal is to show you where the smart money is. An ideal bottom for going long is where smart money has exhausted accumulation, and that's the dark green lines. We will include the text in the video description, and if you find this report helpful, show us some love by clicking the like and subscribe, and we'll see you at the next one.